Man, listen, currently retail investors and institutional investors are in a fight over GameStop. And some investors are making a lot of money and some investors are losing a lot of money. Is GameStop really a good investment? Today, we're going to talk about it. But first, I want you to kiss the like button with your finger and hit subscribe. That helps me tremendously with the algorithm and gives me the encouragement I need to make more videos like this. Before we get started, I want to be totally transparent. I am an active investor, okay? I have 3 brokerage accounts. I manage my IRA account. I had a 401k and a 403b account. I love to talk about investing, but you're going to have to make your own decisions about what advice you want to take and from whom, okay? So you're going to make that decision. This is not investment advice. This is just my own opinion, all right? So let's talk a little bit about GameStop. GameStop is a store in the mall where you go and you buy video games, and you can also sell some of your old video games for pennies on the dollar. Due to the events of last year, GameStop was struggling even more so than it had done in previous years. Why? Because malls were closing, malls were reducing their hours, people weren't going out to their storefronts as much to buy video games or even sell their video games for pennies on the dollar. In fact, a lot of gamers were starting to acclimate themselves to buying games digitally and electronically. GameStop knew this, and in some of their reports, what they explicitly stated was that GameStop was already at risk as a business. In fact, they stated that the rise in online gaming had led to slower sales in their store, and they said that the pace of technology, right, their ability to get GameStop online and the cost of it has slowed their ability to compete effectively. This is public information. GameStop was sad as many folks locked down and went home and Netflix and chills. You know those couples. Didn't have a baby 9 months later, now they have a junior or they have a third. GameStop was expected to go the way of Blockbuster and Toys R Us, right? I don't want to grow up. I'm a Toys R Us kid. This would be my jam. But curiously enough, despite this grim forecast, backed by data and an endorsement by GameStop itself, a user on Reddit stated that GameStop was grossly undervalued. So this particular user spent $50,000 on call options, which I will explain in just a second. Not only did he, over a designated period of time, specifically state that GameStop was undervalued, but a famed investor by the name of Michael Burry also said that GameStop was undervalued. In fact, he said that big companies like Microsoft and Sony were releasing game consoles that would allow for users to play their games on disc, which is a physical product which could be sold at GameStop, thus driving traffic back to a store, which, like we said, was going the route of Blockbuster and also Toys R Us. GameStop continued to be in a really tough space. However, nevertheless, they kept on trucking, right? And so while folks were buying toilet paper and fighting folks in the line for hand sanitizer, the Reddit user and folks like Michael Burry decided to keep buying shares of GameStop, buying call options, and GameStop decided to make a pivot. They invited the Chewy.com founder to join their board. And the Chewy.com founder made statements like, I'm going to turn GameStop into the next Amazon. Additionally, GameStop continued to make headlines by entering into partnerships that were highly valuable, like ones with Microsoft. And while folks stayed home and continued to do more Netflixing and more chilling, Chewy.com founder increased his ownership in GameStop from 9% to 13%. So yes, the data continued to be a little grim with GameStop, but there was a glimmer of hope. And for this user on Reddit and also for Michael Burry and the Chewy.com founder, that was enough. But institutional investors, so these are investors who have been in the game in a while, right? These are the folks who are the OGs. They were not fooled, and they continued to bet against GameStop. So let's talk about what betting against actually means. When you bet against a stock, that's called shorting it, okay? And when they short stocks, essentially what they're doing is they're betting that a price of the stock will decrease and ultimately they will win financially. Let's look at an example of how shorting stock actually works. This shorting works. You borrow stocks at a preset price, and then you agree to return it at a designated date. You then sell that borrowed stock to a different buyer. If the stock price goes down, you then buy back that stock from the person who you sold it to, and you return it to the person who you borrowed it from in the first place. If the price goes down, you gain. If the price goes up, well, guess what? You can lose a lot of money. Get it? Got it? Good. So remember the Reddit user that we were talking about? Well, essentially, he wrote a thread where he stated that if there were any good news headlines about GameStop, then the short sellers would have to go back and buy the stocks that they had sold at a higher price in order to protect themselves from losses. Meaning that if you were holding that stock at that time, you could make off with a lot of money. So you could essentially take over for the 99 and the 2000 or for the 20 and the 21. Somebody sing it with me. Where the money reside, 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 where the money reside. And that's on Mary Had a Little GameStop, okay? But this is what makes the story so interesting. Somebody go and grab your tea because this is piping hot. There were actually more shares being shorted than there were shares in the marketplace. What do I mean when I say that? That means that the short sellers were going out to buy back these shares now that they were experiencing losses, and there were not enough shares for sale for them to buy and return to the original person. So what that means was that the folks who were holding on to these shares of GameStop were saying, buddy, I'm not going to sell this to you unless you offer me a higher price. No, not 100. No, not 250. No, not a 500. And for some folks, they're holding out for $1,000 and $1,500. Short sellers then are losing a lot of money as the value of GameStop continues to rise and rise and rise. And those folks who are holding on to their shares are trying to bargain and barter with short sellers to pay them a higher price so that they can pay their debt. Do you got your tea yet? Because I got mine. So listen to this. Now that we're all talking about GameStop, what that means is that headline after headline after headline has attracted retail investors. So folks who are new to the market and generally, though they may be doing their research, are really affected by trends. So now they're buying GameStop, anticipating that this particular stock, which was at one point worth in the single digits, will continue to rise. Then you add in the fact that Elon tweeted about GameStop and the prices continue to rise and short sellers continue to sweat as they're losing money as they look for shares to buy back in order to pay back their debts. Someone tell me that this is not piping tea. Let's make this example more real. Let's say that Patti LaBelle decides to release a special Black History Month Patty Pie. Folks get super excited about it. The pies are released, and two people decide to buy up all of the special patty pies before the first day of Black History Month. Now, hundreds of thousands of people are like, where are my patty pies? They have promised these patty pies at Black History Month celebrations throughout the coldest and the shortest month, for which we honor, thank you, Carter G. Woodson. But they've already promised all of their fans, they've already promised all the people at their virtual events or their current events or their cultural events, patty pies, and now they cannot fulfill their obligation because two people are holding on to the patty pies. Well, at this point, because they've made a promise to the folks who are attending their events that they'll get a patty pie, they are willing to pay a higher premium. In this instance, let's think about the short seller as the two people holding on to the patty pies, and let's think about the folks who have the pies as the man on Reddit, and in instance, the Chewy.com founder, and also the famed investor that we talked about earlier. And this is also a lot of other people who own these shares before the prices rose high. Now, this is a huge gamble, right? You're gonna have to make whatever decisions that you wanna make on GameStop. But the fact is, the data about GameStop being a struggling business has not changed before GameStop started to overtake headlines as it relates to investing. There are a couple of other investments, in my opinion, that make sense, especially for new investors that would like to make a return. Some of my favorite investments investments include VOO, which is the Vanguard S&P 500 ETF Trust. It tracks the top 500 publicly traded companies on the U.S. stock market. Also DIA, which is the Dow Jones Industrial Average, which is poised to make a huge return as the economy begins to recover, because the Dow Jones is now overrepresented by technical stocks. So you have Home Depot, McDonald's is on there. Yes, Microsoft is also on there. And so DIA is the stock ticker, and it's a really good investment. Other investments that also make sense are the ARK investments. So these particular investments are investments in innovation, autonomous vehicles, big data, the Internet of Things. So you don't have to feel like you're missing out on a return, because there are ETFs, right? Exchange traded funds that allow for you to spread out your investments across multiple companies by just making one purchase. I hope that this helped explain the GameStop controversy, and you're going to have to make your own decisions on what investments that you choose to make. But understand that the best investments are investments that are made, that are formed, all right? And with the rise of folks making investments based off popularity, in my opinion, the smartest investor is the one that's most informed, the one who's most well-read. I always say, don't swim in an ocean of knowledge and drown in ignorance. I hope this information was helpful, and if you've made it this far, don't forget to kiss the like button with your finger and also press subscribe.